Okay guys, we're back for another episode of the Da Vinci program. Welcome to this module. So this module is going to basically be called, what should we call it? This is about market profiles, alright guys? So today we're going to be talking about what a trending market is and what a bullish and bearish trending market is, okay guys? So this is going to be the first installment in understanding market profiles, alright? And there's two types, guys. There's trending markets and there's ranging markets. So those are going to be the only two types of markets that, or two types of market conditions, sorry, that price is going to be in at any given time. Okay, the price is going to be moving up in one direction, i.e. trending in one direction. It's either going to be trending downwards or it's going to be ranging between highs and lows. All right, guys? And today we're just going to be talking about a trending market, what it is, how to make the most out of it, how to benefit from it, and also how to trade in it. All right, guys? So I've got a chart open of EURUSD, which is also fiber. And as you guys know, this is one of my pet pairs. I usually just trade cable and fiber. Those are the two pairs that I focus on. I mean, I do take some trades on USD JPY, which I'll be going over today also. But this is the main pair that I look for, guys. Or this is the main pair that I trade. So I just want you to understand what a bullish market is, what a bearish market is, guys. So the definition that I use for a trending market or a bullish or a bearish market is, if the market is bullish, let's just use this segment of price here, right? If the market is bullish, what I'm looking for is high highs and high lows to be made, right? That's the first thing. And the reason why I'm saying this first and we're not talking about blocks and order flow first is because this is the basis, guys, all right? I always say that market structure is number one. That's what comes first. Secondly, everything else comes after that. So the first thing I look for what is the market structure of a bullish market. And for me, it's high highs and high lows being made, right, guys? This is what I want to be seeing. And this is very, very basic, guys, right? We're taking it back to like ABCs here, but I'm just showing you so you understand the basis, because this is going to be the basis of everything we do, moving on from this point. So this is what I'm looking for, guys, all right? I'm looking for high highs, high lows. It's literally as simple as that. Don't overcomplicate the definitions of this, guys, all right? Just keep this very, very simple. Very, very simple, because that's all you need to be doing, all right? When it comes to trading, guys, you just need to keep things as simple as you can. And the simpler it is, the easier it'll be for you to teach this, the easier it'll be for you to understand it, learn it, and reproduce the results that you actually have. So we can get rid of that now. So in this situation, guys, these are what I've been marking out. And what you want to do is, when you're looking to understand, the area, the range, the profile that price is in, you want to mark out highs and you want to mark out lows. And this will just give you a visual aid of what is actually going on the chart, because it's so easy, guys, to get confused about what's going on. But if you actually take the time to mark this stuff out for yourself so you can visually see it, especially when you're learning, so you can visually see what is going on in the charts, it'll make it a lot easier for you to then, obviously go on and start taking trades, start understanding what's going on and building on your knowledge. So the reason why we want to see higher highs and higher lows, mate, guys, is because when the market is trending, that means it's seeking liquidity above the market. All right, and that's what's really going on. Price is just seeking liquidity in forms of buy stops, in forms of stop loss orders and positions to then activate as price goes up. That's what's driving price higher, guys, all right? It doesn't just trend in one direction for no reason. It's trending in that direction because it has an interest to go higher than it currently is. And the reason for that interest is buy stops. That interest is sell stops also below the market and above the market. All right, guys? So this is why we see price going up. And in this situation, this is the first thing that would define to me that the market is trending upwards. All right? The second thing, guys, is that I would want to be seeing order flow. All right, guys? And what I mean by order flow is, our definition of order flow is seeing bullish candles or bearish candles being respected. Okay? And it's the same concept here. When the market is trending upwards, you want to be seeing bullish candles, all right? So we're seeing bullish candles, so that's bullish blocks and also bullish breakers, all right, both, because both are used as support and resistance, all right, they're both dynamic support and resistance, so we're going to be seeing those being respected on the upside for uptrending market, all right, guys. So in this situation, what are we seeing here? So we see the low was made and a high was also made. Price broke above that high, didn't it? It broke way above that high. Now, what area of price did price come back into? So it broke that high, but then it dropped back inside the range. Where did it come into, guys? All right, it came into a bullish block, found support, boom, expanded, and then what did it do? It took out liquidity above that high. All right, guys. So above these highs and above these lows, there's going to be liquidity laying there. All right, from that high, on that high, same thing on that high also, and also that previous high that was marked out also. All right, guys. There's liquidity above those highs. That is what is moving price up. That is why price is trending in one direction and it's not trending in the other direction. So in this situation, what we're going to see is we're going to see high highs and high lows being made. See, high lows are also being formed now, and we want to see price respecting bullish blocks as price goes up, or bullish breakers also. All right, guys. So in this situation, price didn't drop back down to that bullish block, but it dropped back down into the range, came into that bullish block there. Price also dropped back down and wanted to that high out. Where did it drop down into? Boom. We have a bullish breaker right there. The reason why I'm saying it's a bullish breaker is because it ran stocks below that low, then price went up, and now it's being used as support. All right, guys. So this is the main concept behind this. We just, we have two requirements. We want price to be making high highs and high lows on the market structure side of it, and on the order flow side of it, we're going to be seeing bullish blocks being respected as price sequentially goes up. All right, guys. And what we usually want to see also is we want to see price drop back within the range that it's just formed. So when it takes out a high and it forms a new high, we want to see price drop back down within this range that it's just made, and we want to see it usually come into one of our Fibonacci levels. And what this will do is that it will say, all right, we know that price has taken liquidity out of the market. If price is now retracing, then we want to see it retrace into a level that it will find support at and then continue to make the next higher low, higher high. All right, guys, so these are the three things we want to see. Market structure shifting, order flow also being respected, and price dropping back into our Fibonacci levels. Those three confluences, guys, that's the basis for understanding where price is going to come to and get an entry for the next leg going onwards. So I've marked out this here, and the reason why I've marked out on a daily chart is because we can go down into an hourly and then look closer into the price action. But I just want you guys to understand what is actually going on here. So in this situation, we've had a very big segment of price that has been downtrending for a good 2 weeks, almost 3 weeks, probably about 3 weeks now. But we've seen price downtrend, right? So what I want you guys to understand is that you now know the structure. So if price is going to be trending in one direction, the other direction, you want to see price making, in this situation, lower lows and lower highs, as it has been there. We've seen a lower low being made there, a lower low there again, a lower low, lower low, lower low, lower low, lower low. All right, and the same thing on the upside. So you see a lower high there, lower high, lower high. All right, guys. So that's what we want to see in the market structure end of it. We want to see lows being taken out. Now, the reason why I've drawn out this daily range is because what I want you to see is how you can apply this to the lower time frames also. All right, guys. I want you to understand how this all works and how it all fits in. So I'm just marking out these lows so you can literally see where price is going in. So the rules that I have is that when price is trending one direction or the other, I want to see it take out a low, and then I want to see it pull back inside the range that it's just taken out. So in this situation, we have our high there. We now have the low that price has just made, which is there. And what we want to see is we want to see price retrace back above equilibrium, and we want to see it come into one of our OTE levels. All right, guys, in a trending market, this is what is going to allow you to understand where price is going to find resistance, and also where the best time to actually take a sell position for price to continue downwards and take out and make a lower low. All right, guys. So in this situation, we did not get a pullback into one of our OTA levels, but what did we do see? We saw that price came above our equilibrium level. All right, which means that anything above the equilibrium level is discount. All right, it's above fair value, so it's discount. Anything below that equal level is premium. It's the same thing we've been over in the Fibonacci series, right? We want to see price get above that level if we want to sell, because that means that the market makers are interested in selling it. It's as simple as that, okay, guys? So when the market is trending, you want to see price pull back into that range. If we do the same thing, we apply the same technique here, what do we see? So price took out that low, made a lower low. What did it do? It wicked above. So again, we didn't see it come to the OTE level, but what do we see now? Let me just expand that a bit so you guys can see it. Price did come into a bearish block. So you now have two confluences, right? Price has broken a low, it's met its objective, it's taken out liquidity below that low, and it's retraced back into above the EQ level, which means price is now in the discount section of the range, and it's come into a block. All right, guys. This is how we are understanding when to sell during a bearish market and when to buy during a bullish market. It all pivots around these same principles here. You want to see lower lows and lower highs being made, and you want to also see price pull back above the EQ of that range also. That is what's going to indicate when you should be selling. And then once you know price is above the EQ, then you can start looking for price to either come into an OTE level, or you want to see price come into a bearish block if you're selling, or a bullish block if you're buying. This is the framework you want to keep in mind, guys. So I'm going to go do it one more time and go over it again, just so you guys can see. All right. However, this time I want to get a bit of price action that makes a bit more sense. Okay. So in this situation, guys, I'll be drawing that as my range, and as you can see, price did come back into that range. Oh, 1 minute, let me use this range instead. Price did come back into that range, and it didn't really get above EQ, but we saw a downward move again. All right, so what you'll find is that the ideal optimal trade entry, right? Because that's what the OT is. The ideal optimal trade entry that we want to see is when price takes out a previous low, we want to see it pull back into one of our OT levels, right? And this is the best, this is the optimal trade situation. That's really what you want to see. However, price can use equilibrium as a pivot level also. And usually, if I see price use EQ level, I want to see something, another confluence like a block or a breaker to formulate that trade-off. Right, guys, but it's the same technique. You want to just understand where price is in the range. Has it taken out a low, which was there, and also there, and how is price how are you going to get an entry moving on from there? So let's show you some similar price action also on UJ, right? So in this situation, guys, if we go out to a daily chart, I have the range marked out. So I have our high on the range, right? And this is a daily chart, right, guys? So our high is marked out here. I'll just move that to there. And our low is marked out right here. So we have our area of price we're looking at. We have our high and we have our low, right? Now, this is where you can combine ranges, your knowledge of ranges, with understanding whether the market is trending or not trending, because now you can see a trend inside a range. But the main thing to remember, guys, is I'm just going to go with the same principles here. If price is bearish and trending bearishly, which it is in this situation, you want to see price break a low and you want to see it pull back into the range. So we pull off in from that high to that low. Price is now taken out that low, accumulated below it, shot back up into the range, and now we can see price is at our OTE level. Alright guys, so what this has done is basically showing, it's taken out the liquidity below that low, and it's now showing us a willingness to go down. Okay guys, that's what this market structure break is really showing you. It's showing you that there's a willingness for price to go down below that low, and then what? Come back up into a sweet spot right there. And that's why you see price make the next leg and take out that low. So when the market is trending, you're more or less seeing equal measure moves, all right? Price will make one leg down, take out a low, retrace, make a similar leg down again. So if I was going to draw a line out and show you guys what I mean by that, if we draw, get rid of that. So that is our move down. That's our first A leg down. Do that real quick. That's our first A leg down. What we can do is we can use that as a prediction for where the next low is going to form also. Okay guys, so when the market is trending, you want to see measure moves going down. You want to see price make a low, a lower low, retrace back up and make a similar lower low at the next price leg. And as you can see, that low was made, it was fairly close to that same price move down, guys. Alright, you want to just understand when the best time is to sell and then take advantage of that. Now the same is, it's the same thing for the bullish side of the market, guys, all right? It's the same thing for when price is trending upwards. You want to see price making higher highs and higher lows, all right? So in this situation, if we go into an hourly time frame, in this most recent segment of price, what you're seeing here is that we're expecting the same thing. Okay, so price has made a low. So we have a high there, previous high there, and we have a low there. So in this situation, price found support and it went to make a higher high. So now we understand that price has a willingness, it's shown a willingness to actually go up. What do we do here, guys? We literally just do the same thing. All we're looking for is for price to drop back down into that range that it's just made. So the new range is between that low and that high. So if I get rid of that level. Alright guys. So this is the new range of price we're looking in. That high and that low. And all we really want to see is we just want to see price drop back down inside that range. Okay, just like that. From that leg to that leg, boom, we see price drop down below the equilibrium level again, and we see it drop right back down into our sweet spot level here. And as you can see, price massive expansion up, making a higher high there, and this level has now been taken out. Okay guys, so it's the same thing we're looking at. You know, if price is trending upwards, you want to just see price fall back into the range and then look for an area of support. In other words, we're going to look for a block or a breaker. In this situation, as you can see, price came right down into that tip of that block right there. Boom. And you see an expansion upwards. Okay, guys? So price has now made a lower high, a higher low, and it's now made a higher high. So the way I would tackle this now, if I want to get a long or long entry on this for the next leg up to take out this high, because I will be targeting this high next. All right, and the reason for that is because that's the most obvious area of liquidity. As we know, liquidity lays above highs and below lows. So this is the next area of interest for me, right there. All right, guys. So in this situation, how would I formulate a trade idea off the knowledge that I have now? I'll be doing the same thing. Now that I know price is trending upwards, what I'm going to do is just wait for a retracement back inside this range. So the range is always from the newest high low that's been made and the newest highest high. All right, guys. So when price makes a new lower low, a new higher low, boom. That's where you draw your Fibonacci from to the most recent high. So inside this range, we want to see price form a higher low inside our OT area, and then we want to see a continuation higher to take out this high and also ultimately that high. All right, guys. So then what I'll be looking for is I'm saying, okay, now that I understand what the market structure is, then I'm going to be looking for order flow now. Okay, guys. So boom, we have a market structure sorted out. Now we're going to be looking for, okay, where is the next area of support in the form of order flow, in the form of blocks. So in this situation, this is my area of interest. However, what do I have inside this area, inside this range, below the discount or below the equilibrium of the range? I have a breaker here. The reason why I have a breaker, I'll just delete this really quickly and show you. This is a breaker because it's the last up candle that took out liquidity below that low right there. All right, guys. So in this situation, I'll be targeting, firstly, that breaker. And then if that does not hold, I'll be targeting that block for an entry to go along and take out the new structure high that's been made. And then, of course, the ultimate structure high, which will have the main majority of liquidity lying above it. All right, guys. And it's as simple as that, really. It's just understanding what the market structure is, coupling that with the order flow. And that will give you an understanding of where price is reaching for and also how to get an entry. So that's the end of this module, guys. This is just the first installment of market profiling, but this is a bullish market and this is how to get involved with it. All right, peace out, guys.